Then there are two methods on how we record credit sales. We have the gross method and we have the net method. If it's a gross method, the sales are recorded at gross amount, while if it's a net method, the sales are recorded at net amount, which is the invoice price minus the cash discount. So here are the differences in terms of the journal entry. So first, we have the gross method and the other one is the net method. So sale of merchandise, the term is 100,000 terms 5 over 10 and 30. So again, this means you will get 5% discount if you pay within 10 days from the date of purchase. If this method, you will not deduct any amount whatsoever from the accounts receivable. So it's as is nga 100,000 for the sales. If it is a net method, observe that instead of 100,000, it's 95,000. So, 95 na lang siya because we're getting the net amount excluding natong 5% nga discount. So, 100,000 times 5%. So, that would be 5,000 and you deduct that from the 100,000. So, mahimo na lang siyang 95,000. Second, assume the collection is made within the discount period. So for gross method, simply debit sales discount for the amount ng 5% of 100,000. So that's 5,000. And then credit accounts receivable. You credit the accounts receivable here by 100. And the difference would be the cash payment ng 95,000. For net method, observe that automatic ra i-close ra nimo ang 95,000. So debit cash, credit accounts receivable. And take note, walay term nga sales discount. Wala. Okay, walay sales discount. The third one is assume is collection beyond the discount period. So walay discount here. Okay, wala man siya masud sa discount period. So debit cash and then credit accounts receivable, which is the total accounts receivable without discount. For net method, since nag-advance mo tag-deduct sa 5,000 here, so what are we going to do? So, we credit sales discount forfeited. Nga na forfeited man siya kay wala man gibayaran within the discount period. Now, na-miss ang chance. So, credit the first, we collect the cash, that's 100,000, and we credit the 95,000 nga gi-recognize here, and then the difference would be sales discount forfeited. Okay. Then we have allowance for sales discount. Example, so you have accounts receivable of 1 million at the end of the period. It is reliably estimated that discounts to be taken will amount to 50,000. So just simply debit sales discount and credit allowance for sales discount. And this adjustment may be reversed at the beginning of the next period. Next, you have the accounting for bad debts. There are two methods. We have the allowance method, which will require the recognition of bad debts loss if the accounts are doubtful of collection. So if there's a probability nga dili siya makollect, so that's doubtful, then you can prepare an entry which contains the allowance for doubtful accounts. So this would be the entry debit doubtful accounts and then credit allowance for doubtful accounts. If doubtful accounts are subsequently found to be worthless or uncollectible, meaning dili na gyud siya doubtful but it's really not recoverable anymore. Dili na nato makollect. So the entry would be you close the allowance for doubtful accounts and you credit accounts receivable. In effect, your accounts receivable will be reduced by the worthless account. The second type is the direct write-off method. So it requires recognition of bad debts only when the account proved to be worthless or uncollectible. So ani ra siya nga level kaning worthless ana ka pa mag-record og bad debt nga loss. If it's only doubtful of collection, wala pa kay entry. So what would be the journal entry? So debit doubtful accounts and credit accounts receivable. So, tanawa, lahi sila kay ang allowance method, allowance ang gigamit. Pag direct write-off, accounts receivable ang gigamit. So, example. So, same. I think they are same transactions. So, for allowance method, so observe, you credit allowance for doubtful accounts. Again, for direct write-off, if it's only doubtful of collection, no entry yet. Okay, so wala pa siya entry. Again, you only record the bad debts or the doubtful accounts only when it's worth less. Okay, so kung i-write off na siya. Sa number 2, the accounts are subsequently discovered to be worthless. So, allowance for doubtful accounts, credit accounts, receivable. So, ay pa ka mag credit o accounts receivable pag worthless na siya. So, how do I know, ma'am, if worthless na siya? So, meaning, dili na gyud siya makolekta. If it is direct write-off, ay pa ta mag-record og doubtful accounts and credit accounts receivable. Again, only if it is worthless. Number 3, the same accounts that are previously written off are unexpectedly recovered or collected. So, this happens when natangtang na nato siya, nag-prepare na taani nga entry, okay? Nag-prepare na taani. Unya, pila ka days ba or months or a year after, nibalik si customer, niingon nga daghan kog money, akong bayaran ang ako ang old account. Okay, so kita nga nag-write off na gitangtang na nato ihang account, silbing wala na siya utang kita sa ato kay ato namang gitangtang, atoan na sang i-establish balik ang accounts receivable and the allowance. So balikon nimo siya og i-restore nimo, so mag-entry na sad ka to establish the receivable, so debit accounts receivable and credit allowance for doubtful accounts. And then since we are able to collect it, so debit cash and credit accounts receivable. Okay? Then, the same accounts that were previously written off are recovered. So, that's debit accounts receivable and credit. This is doubtful accounts, doubtful accounts. Sorry for the error. So, credit doubtful accounts. So, you're going to follow the same account title here. So, credit doubtful accounts. So, that would be restored. So, ma-restore ang accounts receivable. And then, for the collection, so debit cash and then credit accounts receivable. Okay? Then, what if there are doubtful accounts in the income statement? How do you classify them? So, it depends if the granting of the credit and collection of accounts are under the sales manager. So, it will be part of the distribution costs. If the granting of the credit and collection of accounts are under the charge of an officer that is not a sales manager, and if there's absence of any contrary statement, then it will be classified as administrative expense. If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.